So I'm very glad to welcome you all to another advanced team conversation, this time about China and green finance. We have two leading experts in Charles and Christoph, to be moderated by John Lillywhite. Handing over to you, John.
Hi, everybody. And Oscar, thanks for that introduction. Dr. Christoph and Professor Charles, thanks so much for joining us today. So, jumping right in, I thought we'd begin with a short introduction to both of you, and then talk a little bit about the general themes, some of the general issues and sectors you're both working in, and then kind of deep dive into some of the policy discussions and challenges and opportunities you both work with on a daily basis. So, Dr. Christoph, starting with you, you are the founding director of the Green Belt and Road Initiative, Green BRI Center at the International Institute of Green Finance. So what is that?
Right, so what we're doing at the Green BRI Center is looking at how we can accelerate greening of investments in the Belt and Road Initiative. So pretty much all Chinese overseas investments, and how can we ensure that there are conscious of environmental impacts and reducing negative environmental impacts, while of course accelerating the economic development goals. So we're working with a number of different stakeholders in China on the regulatory side, on the financial sector side, but of course also with a lot of the developers themselves, so state-owned enterprises and private enterprises, as well as of course with the necessary or large BRI countries that are receiving a lot of the Chinese investments, and international partners in the European Union and the US.
So you also speak Chinese, is that correct? What was your kind of career path into this job, and why did it appeal to you?
As long as you don't ask me to speak Chinese here, I can of course say that my Chinese is—
that was the next question, but anyway.
It's fair enough. I can get by, but speaking Chinese is an ongoing challenge for anybody who has tried to study Chinese. I think it's very well aware of. So I very much admire the people who have studied Chinese and can really fluently converse in Chinese. So my career path is, I've done actually over the last years, a number of different things. I've been with the World Bank for quite some time, working in a number of different markets with the World Bank on the advisory side. I was a couple of years at Harvard, and then came from there to China about 4 years ago to constantly work here for the last 4 years.
Okay, well, thanks for that introduction. So, okay, Professor Charles Chang, you are the Deputy Dean of Academics, Professor of Finance, Director of the Fintech Research Center at Fanhai International School of Finance, and a member of the finance faculty at the Chinese University of Hong Kong. So could you introduce yourself a little bit, as well as possibly very quickly, just telling us a little bit about Fanhai International School of Finance, I hope I'm pronouncing that correctly, and of course the Chinese University of Hong Kong.
No, absolutely. So my name is Charles Chang. I came out to China a bit before Chris. I came out in 2009 from Cornell, where I was on the finance faculty for 6 years. And then came out here, and at that time, really sort of at the beginning, actually, of the so-called new modernization of Chinese university education. And was very fortunate to join another school here in Shanghai, also one of the best finance schools out here, a school called Shanghai Advanced Institute of Finance, where I had the opportunity to meet Chris so many years ago. And then in 2017, we founded the Fanhai International School of Finance. Again, very, very fortunate to receive what was at that time the largest single donation by a Fudan alumnus to start this school, with the express goal of establishing a global first-rate finance program, both in terms of the educational offering and of course in terms of the research. And so what we do here in that regard, in that aspect, is both academic research, my space being fintech, and in applied and policy research. And that's something that has been very important to us since our founding, and was really one of the stated goals of both our donor and of our university when we started this all, and that is to have and to provide a global perspective and potentially global leadership in our research, particularly in my case in fintech and in policy. And so, quite a lot of what we do here is to look at things like Belt and Road, being, a primary outreach initiative on the part of the Chinese government to have a positive and sustained impact on the region, and to figure out, how to do that right. And as Dr. Nedophil pointed out, how to do that in a sustainable way, and how to do that in a sort of win-win for the economies, for the people, and of course for the environment as well. So those are the types of things that we do here, and I want to thank you guys for inviting us and having the opportunity to speak with you guys today.
Yeah, so thanks for that introduction, and we'll get to the BRI in a minute. I'm sure a lot of our listeners are already familiar with it, but I think both of you are approaching it from a perspective that's a little bit unique. But just as a very quick aside, so in 2005, I was at law school with a lot of students from Hong Kong and mainland China who would later go back to kind of, join the judiciary or policymakers in Beijing. And that was 2005. And a lot of them would talk about universities in China and how they were trying to globalize. What's your perspective on how the kind of Chinese university system as a vector of globalization has shifted over the past 5 to 10 to 15 years, as a quick aside, because I think it is interesting.
No, I think there's been a lot of gains. I think, first of all, of course, is bringing the talent. Okay, and I think that had been a real issue, right?
Right.
Just in terms of pay scales and benefits and all these sort of things. Of course, the intellectual property aspects and so forth. And I think a great many strides have been done there. I'm a US citizen. I was born in Boston. So, I am not a Chinese national, have never been. The vast majority of our faculty here at Fanhai, likewise, all of them studied and got their PhDs abroad. Many of them taught abroad for a number of years. Many of them are not, I should say most of them are not Chinese citizens. And so I think that's number one, was to bring the talent. You can hardly expect to deliver a top grade education without having top grade faculty. And then of course, the additional outreaches, right? With the partnerships, joint degrees, as you may know, NYU has a campus here in Shanghai, 20 minutes walking home. So absolutely. So there's been incredible outreach in the last 10 or 15 years.
Yeah, because historically, that's been a very big problem in this part of the world. So not so much in the UAE, but in the Levant, you have kind of massive brain drain of the best, and the brightest students going abroad to foreign universities when they can, getting great qualifications, great experience. The problem being they often don't come back. And I think that's slowly, possibly, hopefully just starting to change and have an impact, particularly in the UAE actually. Okay, so moving on to quickly introduce the Belt and Road Initiative. Now, I'm sure you both get bored about, explaining what the BRI is, and we won't have to go into it in too much detail. But I guess the main point is this is a truly humongous project. In 2013, Xi Xinping announced the investment program. And according to a talk I listened to by you, Dr. Christoph, the total worth of the BRI is more than World Bank, IDP, AFTP, ADP, and several other funds combined. So the point is, this is a massive undertaking, and it's a global undertaking.
That's correct. So I think you covered some of the main issues of the Belt and Road Initiative. So it was announced in 2013. It consists of the land corridor and the sea corridor. So there are two main silk roads that are under consideration. There's interestingly some confusion that we can discuss about here in this podcast as well. There are two different definitions of actually who is a member of the Belt and Road Initiative. So there's a definition which is the countries along the Belt and Road Initiative. That is mostly 64 countries that span from China all the way to Europe. and touches a little bit the African continent, with Egypt being part of it. That's one definition that is officially used. I like the other definition more of countries that have signed memorandums of understanding with China to join the Belt and Road Initiative or to cooperate under the framework of the Belt and Road Initiative. Now that's, of course, much more explicit, where countries actively decide to become part of this framework. And it's not only about investments, it is about much broader cooperation. So facility connectivity, more seamless financial transactions, also people-to-people exchanges. So there are the 5 pillars of the Belt and Road Initiative. It is much broader than just investments. And it's, of course, the goal is often depicted as a present of China to the Belt and Road countries, and ideally to the world, and that it's very, very open. Of course, it's a Chinese initiative, and of course, China has some both economic ambitions with the Belt and Road Initiative, for example, to improve trade relations with the Belt and Road Initiative countries. It also has, when it does investments, of course, has financial interests when it does these investments. And it, of course, also has policy goals to strengthen political relationships with a number of these countries. And what we're also seeing is, particularly over the last year, when we analyzed the Belt and Road investments, that indeed the slowdown of investments, of course, we saw in 2020 due to COVID a significant slowdown of investment activities in the Belt and Road Initiative, that the countries that are, however, members or kind of signatories of the Belt and Road Initiative saw a slower decrease of investments compared to non-BRI countries. So there's the decrease of investments was less so in BRI countries than in non-BRI countries. So it seems to have some benefits for these countries to receive Chinese investments also in the crisis situation.
Thanks for that introduction. I like the way you referred to it as a framework, and it's not just geopolitical. It's financial. It increasingly, I think, involves digital, and it also involves other aspects such as shared laws or shared even technological protocols. But I think approaching it from the perspective of green finance and financial instruments is something that I haven't actually read that much about, and we need to jump into. I think another point that I've had mentioned by you and others before is that there's also a historical role to this. You've got the idea of the old Silk Road, which worked in the past and of course played a major role in the history and evolution of the Middle East. I've also got some numbers here, up to 700 billion between 2013 to 2019. So we're talking about some serious investment and a serious kind of long-term project. So I think now we've introduced the BRI, what might be interesting as well is also talking a little bit about China on the global stage, why China would begin a project like this, but most specifically, why the green economy is important for China. So I wondered if either of you wanted to kind of jump in on that and kind of give us a bit of background on the Chinese economy, its global ambitions, but also in particular, the role of green finance in the green economy.
So I'm definitely happy to talk about these topics, and I also kind of course, am happy to learn more about with Charles together, also how digital finance can, of course, play a big role in supporting a lot of these ambitions. So the official language is that green has always been part of the Belt and Road Initiative, and since its inception, green was included in the Belt and Road Initiative. Now, when we look at the investments, of course, there is still a lot of room to improve the greenness of the Belt and Road Initiative. Now, what do we understand as a green and kind of green investments and therefore green finance is, of course, a lot of the BRI projects. The bulk of the investments and bulk of the activities are in infrastructure investments, or transport and energy investments. And there it's relatively clear for quite a while for the overall international community what is green and what is not green. In December 2020, China, or the relevant authorities in China, backed a study or a guidance, which is called the BRI Green Development Guidance. It has a traffic light system for BRI projects. I was part of this study and developed this traffic light system, how to evaluate projects in terms of their greenness. And that, for the first time, really provided a taxonomy, which projects are green, which projects are not green, and particularly also for the transport and energy infrastructure. So of course, solar and wind investments in energy would be considered green. Fossil fuels would not be considered green, but would be considered red, so non-encouraged projects. And similar in transport, public transport, of course, green, road transport, with some question marks, potentially even red due to the impacts on biodiversity. So there's, for the first time, kind of a much stronger framework. How do we actually understand and conceptualize green finance to put it really into practice, rather than just saying we want to have a green BRI without really defining it. So this is, in that case, really a landmark publication that was backed by relevant ministries and authorities in China. And this is kind of what then also provides the opportunity for both developers and financial institutions, because what we are looking at from a financial perspective is, of course, risk and opportunities. Quite simply, an investor, really pure investor, cares about financial returns. And what's really interesting is that due to climate change, we're seeing a shift in how we have to evaluate risks. How we evaluate the physical risks of extreme weathers, how we evaluate the transition risks, for example, of new laws, how we evaluate the transition risk of new technologies. And what's really, really promising is the massive decrease of the cost of solar and wind. And that has provided, of course, a much higher return often on investments in wind and solar, because the cost of generating electricity with wind and solar have decreased, whereas the cost of generating electricity with coal and any type of fossil fuel has actually not decreased, but has been stable, if not increasing, due to potential carbon taxes and carbon prices. So from an investor perspective, then it does not make sense anymore to invest in these fossil fuels, because it becomes just a stranded and dead asset. And so this is what we're trying to really understand, and also try to include those considerations into the financial decision making, and also supporting the relevant regulators to really conceptualize how do we evaluate brown risks and green opportunities in the financial sector and in our investment decisions.
Okay, that's super interesting. I mean, we should go into the investment aspect next, but just before we move on to that, there seem to be kind of two general themes here. One, you kind of have the traditional ethical Western kind of discussion on climate change and moving the economy green. But on another level behind that, you also have this understanding that a lot of these technologies in terms of renewable energy, in terms of automation and a cleaner environment, will be a component of the fourth industrial revolution. So it's not just about moral or ethical systems or reducing the carbon footprint of China and the Green Belt and Road Initiative, but there's also an element of technological competition and disruption in some of these new technologies that are being pushed to market. And I think that's important, because it's also an element of incentive, right? It's an incentive for investors, and it's also presumably incentive for China as a whole. So I wondered if Charles, you wanted to speak to that a little bit.
Yeah, so really it's layered, right? I think first, when we think about what China's trying to do, okay, and to answer your very, very first question, I think China, in a word, is looking to be part of the leadership, okay? And what I mean by leadership is in all the different levels, okay? Be it financial, political, environmental, and so on and so forth. So when we think about, what's China trying to achieve in a macro sense, I think that's what we're talking about. right? And that's reduced bilateral dependence on any particular region or country. That's about fully sustainable development of its own, including the green, but the sustainable development of the country itself in terms of its domestic market, in terms of its wage levels and income levels, in terms of eradicating poverty, in terms of financial inclusion. You know, all of these things are mission critical for China to be itself sustainable going forward, right? And so when we think about then the Belt and Road countries, and so I'll be very specific, not just the initiative itself, but the countries along the Belt and Road. You know, you're talking about anywhere between 40 and 50% of global GDP. You're talking about well upwards of 60% of the world's population. And as you mentioned, most of the estimates we see in terms of infrastructure alone, you're talking about $2 to $3 trillion US of investment. So it's all of those things, right? And that's market, that's development area, that's also regional stability. And I think that's something to really keep in mind. You know, when I started to learn about the Belt and Road Initiative and talking with senior officials and so forth, strangely, the term that came to my mind is ecosystem. It's about, God, I'm going to sound way over romantic on this, but it's about a joint destiny, right? It's about saying, look, we're going to grow as a region together. China is a machinery that generates all sorts of opportunity, all sorts of markets. You know, take your product, multiply it by 1.5 billion, what do you get, right? And we can be an engine for development for the region and for the Belt and Road countries. And how do we intertwine, right? How do we build this into an ecosystem? So to give you an example in terms of green, right? So nobody does hydroelectric like China does. And you don't have to spend much time at the Three Gorges Dam to see that. And that's something we become good at. We know how to build dams. We know how to do hydro. There are many, many countries along the Belt and Road that are housed within mountainous regions that have great elevation drop and water mass to come through and turn turbines. And then the question becomes, well, how can we do that, right? How can we be part of that development, both from the perspective of the knowledge transfer, bearing in mind that we're not going to run these power plants, right? We're going to help you build them and develop the tech for yourself. But that's about sustainability within your own country. And then, like, as Christoph pointed out, how are we going to finance this thing? And that's where I think a lot of the innovation in the finance area that China's trying to do now is going to play that role, right? So for example, when we talk about things like, you know, the CBDC and the opportunities to do direct RMB digital investment in Belt and Road countries. Now we're talking about, you know, offering financing almost instantaneously, you know, reducing the reliance on US dollar, offering an additional financing tool for SMEs, and so on and so forth. Beyond that, as we talk about, you know, blockchain technologies that are being developed here in China, now you're talking about opportunities to do fractionalizations and securitizations of large-scale infrastructure projects where the local economy is included in the financing and the development of these green technologies. So it's no longer about China drumming up investment for a hydroelectric plant in country A. It's about how can we chop this up into small enough pieces where the local economy, which is the beneficiary of the green technology, how do we get them to be able to engage in that financing task and in that development?
Okay. That makes sense. So the kind of connection between emerging innovations in finance and emerging technologies that are coming to market in green technology. What you're saying is there's a strategic reason for the two to come together. And so for background, I mean, mobile payments are 70% of GDP in China versus 6% in the USA. I think that's becoming an increasingly major conversation, both in the United States and in Europe. And you've also had a story recently on China creating its own digital currency, the cyber yuan. And I think you referenced a bit of the role of blockchain and some of these new financial instruments in making China, as you said, more independent and more of a player at the table globally. But I guess, you know, just on a very basic level then, what synergies do you both see? Because you've clearly spotted some opportunities here or some very interesting shifts in how the world is working between the evolution of fintech and the financial market, specifically in China, and China's ambitions for the BRI.
Well, Charles, you should go. Yeah.
Yeah, no, I'll just talk quickly about one example, right? And that's been super hot lately is this green bonds market, right? And these green bonds are now becoming a very popular financing tool. You know, depending on who you ask, it's upwards of, say, $500 billion US level of market. And then the question is, you know, how do we let this develop more? Now, China has been a major player in this space, but as Christoph pointed out, I think very, very astutely and precisely, the question is usage of funds, right? You can claim that you're raising this money to do whatever you like, right? In the end, it's about where did you actually use it? How is this being audited and or monitored, right? And then how are redemptions done to the investors? So along this particular, you know, aspect, you know, the use of proceeds, the tracking of that, one tech that we've been working on here in the Fintech Research Center is how to engage blockchain in the design of green bonds. And in doing so, allowing now and enabling more than just sovereigns or pseudo sovereigns to play in this green bond area, but to allow corporations and you know, other regional or even local public entities to say, look, we know we don't have the credit of a sovereign entity. We're not going to argue that. What we're going to say is we're going to be ultra transparent. We're going to track everything. We're going to distribute a ledger. We're going to share all this information with our investors. On top of that, we're going to do, you know, smart contract, regulated and governed payments and distributions. Involved with that, then you can have all sorts of monitoring plays. So for example, let's say you committed in accordance to international standards, let's say you committed 95% of my proceeds will go towards a green technology. But instead, as the ledger then will show and every expenditure of dollar is tracked, turns out you only did 85%. Now the smart contract goes into play and says, okay, well, you were paying a 5% coupon. You're going to pay a 7% coupon now. And that doesn't have to be monitored by anybody. That doesn't have to be signed upon a new contract. That doesn't have to be renegotiation. That's straight in the smart contract, automatically kicks in at appropriate intervals. And now there's a real penalty, right? There's a real penalty to the issuer to say, hey, it's not just some standard I'm supposed to follow. In fact, it's going to be linked directly to the cost of servicing this debt to me. And by applying that blockchain technology, and you know, I'm sure we all know how those things work. Basically, number one, everybody's going to see the ledger all at the same time, including regulatory bodies. And then with the smart contract technology, we're going to implement whatever enforcement details that need to be set in straight away. And these are things that then are set up at the active creation at the genesis stage, so that every investor will know, hey, these are rules of the game. If they don't follow these rules, these will be the things that are going to happen. These are going to be, you know, my remunerations, the ways that I'm going to be able to, you know, get back whatever is coming to me in terms of me wanting to support green initiatives and maybe you not doing it in such a scrupulous way, right? So So I think that's just one example of how these green initiatives and the technology, the finance technology, may be coming together for the benefit of both, right? And once we lower the risk of green bonds, once we can show that, you know, that they're really going to be used for green initiatives in an enforceable way, maybe that makes them more attractive to investors.
Right.
You know, builds the market for everyone.
Yeah, so there's some real innovation, real world innovation happening there. I mean, it's not just policy, but I guess a question for you both, particularly Dr. Christoph, is how do you invest stakeholders in this process because it's new? And is that about writing policy? Is that about bringing people together? Is that about regulation? Particularly as you're looking for investment, you know, and you're looking for people to support this with financial backing. How is that process going? Is it an uphill journey, or are you beginning to get momentum? You're beginning to bring stakeholders on board. People are beginning to understand what you're trying to do. And also, is that process restricted to China? Is it easier to bring people on board there? Or are you really having a discussion that is, you know, multipolar in different countries?
That's a great question. And I think how to bring people on board is always by providing them a benefit. And who's having the benefit? If it's the investor, they will drive it. If it's a policymaker, because it's a public good goal, of course, the policymaker has a role. I want to kind of also add some more examples to Charles and how we actually see the use of digital technology and digital finance to drive particularly also greening of investments, not only in the BRI. And I think that's a more broader aspect. The core of blockchain technology is, of course, the kind of that it's not alterable. That's kind of not kind of without, it's not without broader consent. So you can't tinker with it. And I think that's in many ways the main advantage. Many other things can be done actually in a much cheaper way, because in the end, blockchain technologies require massive amounts of energy. It's not that blockchain technologies are actually per se green. Blockchain technologies per se are actually quite energy intense.
That's quite ironic.
It's absolutely, so it should be used for what it can be used and for where it actually brings a value add. It does not bring a value add actually to most of the things that blockchain enthusiasts are necessarily talking about. This can be done with a simple database, and we don't need this massive distributed ledger with so much computing power. Just to give you, related to blockchain, but China itself is responsible for about 70% of the Bitcoin operations worldwide.
Right. Yeah.
And there was a paper in Nature just published this year in 2021 that by 2024, the blockchain operations, and particularly Bitcoin operations of China, will just the carbon emissions from the Bitcoin operations will be equal to the carbon emissions of the Czech Republic and Qatar combined. So we have to wow. really make sure that not changing one kind of dream for actually a clearly energy intense technology. So where is this unalterability actually useful? One of the important aspects that we're talking about in green finance is the provenance of products. That has to do with biodiversity protection, that has to do also with climate protection. So if we want to say we want to ensure that the wood, the timber that we're using is not coming from any protected areas, that the fish that we're using is actually not harvested or fished in protected waters. That's when blockchain technology, because it's unalterable, is really important. So we don't falsify our documents. Another aspect is electricity. Where does actually electricity come from? If you are a conscious car company that says we want to be actually a green car company, we have NEVs, and it does not make sense to get the electricity for our NEVs from any of the coal-fired power plants, but we want actually to have a green mobility. Therefore, we have to ensure that our electricity comes from a green source. This can be done with blockchain. You don't want any alterability. Other things is carbon offsetting. This is a huge topic. How do we actually offset carbon that we are creating and that we will create for the foreseeable future? How can we make sure that the carbon offset that we're buying is actually used in a real way. And it's not double use, so we don't have double accounting in carbon offsetting. So this is where kind of the advantages of blockchain technology, of the unalterability, really can make a difference. So for example, on the carbon offsetting, we have not solved this problem. This is Article 6 of the Paris Agreement. How do we do global carbon offsetting? How can we get private markets and private investors actually involved? So like, we have massive amounts of carbon sinks that we can use, that we can activate. How can we monetize them without double counting? And there again, of course, blockchain technologies can play an important role.
Yes, I mean, the immutability of blockchain, you know, the provenance, particularly supply and logistics, that is transparent when you're talking about a kind of global infrastructure and information highway and legal framework, as we discussed earlier, makes total sense. And also how you describe that fitting into aspects of the green economy, I think that now makes sense to a lot of people listening. Certainly made sense to me, and it sounds really exciting. I think the bit where people get, whoa, you know, this is technical. This is a jump above that, is the financial element, the financial instruments, and I think it's a difficult conversation, but I think we're gonna kind of muddle through it, if you don't mind. So I'm reading about
that's what Charles comes in.
Great. Okay, Charles, let's have a bash at this then, because I'm reading here about the role of central banks, and I've also got some background on Professor Wang Yao, director at the International Institute of Green Finance, who recently commented on the Green Central Banking Scorecard, which aims to assess central banks' performance. And she noted that central banks are not incorporating climate change related risks or policy frameworks, that climate change is possibly a threat to financial stability. I think we've referenced that early. And also talking about supporting the development of green finance, including new monetary and financial policies. Now, I think we've talked about the blockchain, we've talked about all of this, but you've got this idea of a new financial ecosystem. How does that fit into all of that? What is the role of central banks? What is the role of China's growing market share in crypto? How does this all fit together? Because it is confusing.
All right, I will take that question, Charles. I will start with that. So there's some interesting developments over the last years in the role of the central bank. So what is the role of a central bank? It's actually quite simple. The role of the central bank is the stability of money. So we don't have high inflation or we don't have deflation. So the stability of money in a system. And so what they kind of have been looking at is kind of the monetary flows. How much money do we actually have in the system? How is the import-export to also have the currency risk? So that's all kind of part of the central bank. And what really drove the kind of recognition that climate change and broader ecological crisis have an impact on monetary stability was actually Mark Carney, and also in many ways PBOC, the People's Bank of China, in 2015, when they started to do more research on what is actually the climate risk on the financial system. And so the Mark Carney, together with Michael Bloomberg, then set up the Task Force for Climate-Related Financial Disclosure that looked at different types of risk that kind of come from the micro level, so from the financial sector, then all the way to the macro level for the overall macro potential stability. And I mentioned some of those before. It's separated into the physical risks and transition risks. So physical risks, if you have droughts and storms, and suddenly you don't have food security anymore because the harvests are not there. The energy system is not working anymore because you don't have, as I said before, the hydropower plants because there's no good enough water flow. And then you have transition risks, which are much more on the regulatory side or on the technology side, or also on the market behavior side, so that consumers don't want any of the dirty products anymore. And so kind of all this together, if kind of a lot of the companies are going bankrupt, so energy companies are not making enough money, fossil fuel dependent companies are not making enough money, what is happening with all the assets on the balance sheet of the banks? They have to write them down. If you have a huge write down of assets, that of course trickles them down to the whole economy. And that's when the macroeconomic stability for the whole economy is in question. And the changes in climate change are happening so fast that this is not something that you can slowly adapt to. This is happening really faster than anybody of us expected. And so a number of central banks, from the Bank of England under Mark Carney that started it, the People's Bank of China, where Ma Jun here also in China played a massive role in integrating some of these considerations, is integrating that. The European Central Bank is integrating that. Even now the Fed, the American Central Bank, is talking about the climate risk for the monetary stability, and really force the financial institutions to do stress testing for climate. So before we did stress testing, if you remember, after the .com bust, that we have to do more stress testing. What is the value of our portfolio if we have to write down stuff? Now it's really about climate stress testing, and that this is becoming integrated, an essential part of the duty of financial institutions mandated by the central banks. Also the PBOC, the Chinese central bank, just announced it actually last week that they will integrate that much more strictly into the management of the banks. So that's an absolute shift in mindset that we have seen over the last 5 years.
Okay.
However, we are not there yet. We are kind of what Wang Yao, who's my dear boss, said. We are not there yet. Kind of, we are just at the beginning to really wrap our head around the system. So there's a network which is called the Network for Greening the Financial System, NGFS, that is a conglomerate of the relevant central banks that tries to understand how do we actually evaluate these climate risks? How do we possibly also include broader risks like the loss of biodiversity into our risk models that we have to do?
Yeah, I mean, there's some great case studies in the Middle East, again, on food security caused by climate change and how that can lead to very immediate political consequences. But Charles, do you want to jump in on that and talk a little bit more about some of how these new instruments are looking at these problems?
Yeah, with respect to the CBDC in particular, right? I think really it's about a very holistic definition of sustainability, right? And that includes what Christoph mentioned and all the bits on climate risk and catastrophe avoidance and stress testing in this regard. But I would also say, I shouldn't say, but in addition to that, I would say that really the CBDC is also so much about improving the overall operational efficiency of the entire economy. And in so much as that reflects itself in additional sustainability, that of course then generates additional cushion for stress testing. It addresses additional issues which relate to systematic risk and systemic risk, I guess is now the hot word to use. So I mean, it's just a few examples, right? So I mean, one thing that Christoph mentioned, I think this transition is incredibly important. Right. Okay, the ability, because you're not going to get from 0 to 100 immediately, right? And as China now is, let's just use power as an example, transitions away from coal, which ironically was in its earliest versions of its green initiative were relatively green uses of coal, which I think makes some people laugh. But it's that transition, right? How do we sort of step by step, right, incrementally move in the right direction? And one of the things that CBDC does and has already been shown to do here in China is it allows you to do directed subsidy and directed financing so much better than with cash, right? So you look at the counter example, let's just look at, COVID relief, right? So if you look at the United States, you see just an avalanche of mistakes, right? I remember reading, the Los Angeles Lakers getting a relief check that was from the Small Business Administration, and you hear about, you have to be a member of a certain set of banks in order to get, the loan, and, checks getting lost and checks ending up at tax service providers rather than at the individual themselves, and so on and so forth. And that's just a paper system, and that's how the paper system works. It has to matriculate its way sort of one step at a time. Whereas the CBDC allows you to direct to individual wallets. It allows you to connect with, a whole new level of financial inclusion. And of course, not just in terms of QE, but in terms of financing, bank accounts, small business loans, and so on and so forth. So I think number one is that it's the ability to do sort of target linked, if you will, financing on a massive, almost into the individual level scale. Number two, I think it then enables a system of ultra high liquidity and of ultra high efficiency. So you mentioned a number before, which actually is part of a report that we put out just this last month with regard to third-party payment, right? And as you said, mobile payments about 17% of GDP here, but outside of mobile, all of online payments now more than double that, right? So it's interesting. A very space. Right. And importantly, if you look at it, mobile payments are directly linked to online commerce, which last year, even during COVID, grew, depending on who you ask, let's say 20% in China versus, of course, a negative number for offline commerce, right? So if you put those two things together, you'll see that the virtual payment or the third-party online payment becoming ever more important as the entire market changes, the economy changes, and how people are now shopping and so forth. And then the CBDC then becomes even that much more important, right? As it links in with guys like Alipay and WeChat Pay. And don't forget, right, there's still Union Pay, right, which is now linked directly to the main banks here in China. And when you put all those things together, now you're talking about an ultra liquid, ultra fast moving, ultra low cost, ultra efficient way to move money around, not just within China, right. But now you're talking about cross-border. And wow. As we talked earlier about now in terms of project financing, not just consumption, right? So I think when we think about the CBDC, it is appropriate to also, I think, to think more in terms of not in addition to the green aspect, but also the additional sustainability aspects of it, which then enable all of the other positive benefits.
Yeah, I mean, it's such a complicated but interesting discussion because you have the points on efficiency and the points on scalability and trust and why new instruments are needed. But also beyond that, you also kind of have this new global consciousness or conversation about dissatisfaction with existing systems. My generation, and in particular the younger generation, grew up during a financial crisis in the West. We've increasingly grown up, not so much in the developed, but particularly in parts of the developing world, seeing climate change causing issues and perhaps caring about it and seeing it as a real world problem more than the generation before. And I had a call, a very strange call at Christmas, where we had some Shanghai-based crypto entrepreneurs and some quite high-level American blockchain developers who they'd worked and pitched to Tim Berners-Lee and others, and then some Middle East entrepreneurs on the call. And it was such an interesting call because in a way they all kind of had similar values, and obviously there's some other things in the background, but the sophistication of the Shanghai-based team, in particular in this technology, there was a point at which my American friends just sat back and kind of said, well, we'd love to learn from you, which was just, and it was a really interesting kind of discussion. And of course, there were also philosophical differences in terms of the technology. So in America, you kind of had the libertarian blockchain community, freedom on the internet. But then you also have the guys who want to create new financial instruments, new financial structures. And then in China, you have very advanced technologies, but some different philosophies behind it as well. But I guess the point is how these new systems are being layered connects into so many things like development, like climate change, like sustainable finance in the future. So I think, you know, just to end, we've got about 5 minutes, but I just want to keep going in to some of these technical aspects on the fintech level as much as possible, so everyone understands it as much as possible. I have a quotation here, a guy called Ernest Lee from the Hoffman Center for Sustainable Resource Economy has suggested that China could pioneer new solutions by using the strength of state-owned enterprise, which again, you know, is something that in a way is particular to China when compared with America, and proposing the idea of making 20% of public sector pay in the form of tokens redeemable through nature-based economy purchases. So one of the reasons I brought that up, one is to give a sense of how quickly ideas are shaping in China, particularly as Dr. Christoph mentioned in terms of, you know, the rate at which crypto is growing, but also, you know, how realistic are some of these solutions? How far away are they? The idea of investing or being paid in tokens.
Well, I can give you just a couple of very, very micro examples, but I think it is happening. So you may know that, you know, the CBDC was rolled out last year, and one of the test cities is Suzhou. Okay, and Suzhou's test product, if you will, the area in which it was asked to test this was in transport. Okay. So one project, again, that we've been engaged with does on a very micro level, it's certainly not 20% of pay, but on a very micro level is that if you have a parking lot, okay, so this is a very sort of common way to buy land, right? It's a super low cost way to buy land and make use of it. But if you are able to track, and this is where the blockchain comes in, you have to prove, okay, that on a, I forget what it is, monthly or however weekly basis or what have you, that you have installed and make use of X percentage of charging stations, okay, then you get a certain part of your licensing fee and taxation waived. Furthermore, the people who use these stations, okay, and again, they have to swipe a thing and it goes to the digital wallet. They get that money replaced to them if they can show that they have been in fact parking in a partnered garage, and they were in fact parked in a charging station and charging, and they were paying for it and so forth. So you can imagine this is a lot of information that's got to get traded now. Right. So the car has to actually be parked in that garage and has to be charging their car. Right. That, of course, is easy to keep on a ledger, but then that needs to be reported simultaneously with the garage itself, right? In this case, to the blockchain, and everyone is then awarded through the issuance, in this case, of CBDC, or basically a coupon in the form of CBDC, if you will. Okay, so of course that's a very small example. That's nowhere close to.
No, that makes total sense. Yeah.
But we're already seeing things like cities moving to pay their public employees only through digital currency, and that makes it possible for you to do these sort of programs.
Wow! So the cities, so in Dubai there are case studies, and in the States as well, people looking at connecting IoT into smart apps, into decentralized ledgers, and then possibly laying crypto payments in on top of that. But if people, I haven't heard any case studies of people actually being paid in tokens. Is that something that's coming in China?
Well, in this case, it was basically coupons laced on CBDC.
Right.
So not in a true sort of token. So the blockchain is there just for information, not for the issuance of the token.
Okay, interesting. Well, look, I guess to round things off today, I thought we could finish this with some quick stats. But since 1990, China has grown its GDP by 40 times. GDP per capita by 32 times, according to the World Bank. Its emissions have grown between 1990 to 2020. China increased its emissions from 2.4 billion tons to over 10 billion tons, making it a country with the largest absolute greenhouse emissions, surpassing the EU in regard to per capita emissions in 2016, despite a GDP per capita of about 40% of the EU. Now, there's a lot of media out there on competition with China, but some of the things we've discussed today in terms of green finance and fintech would also suggest that collaboration, technological and policy collaboration with China could also be a way to offset some of these other tensions. What do you think are the opportunities for global society and international stakeholders to learn from some of the case studies, rather than being threatened by them, that are taking place in universities and cities in China?
I think that's one of the big areas of cooperation, and in the world it is, of course, right now going into a number of different conflicts, particularly over a number of issues with China, between the West and several Western countries and China. One of the areas where we continue to see very strong cooperation and cooperation interest from all sides is actually green finance. So developing common standards on green finance was just announced again today by the People's Bank of China, that they want to do that with the European Union, that they want to finish a common harmonized green finance framework. The G20 working group on green finance was reactivated about a month ago with the co-lead of the US and China. So this is kind of, the green finance is kind of the minimum cooperation mechanism, which seems not to be so competitive, because we all agree financial flows are important. Financial flows keep us fed and keep our economies somehow turning as much as we like, and we need to do green. So I think there is kind of this common understanding that this is a global good, no matter kind of on the technological competitions that we have, on the information control that we have that comes with some of the digitalization aspects. Kind of the concept of green finance is really something that brings together, and still true today, really, China and the world, and is a platform for cooperation. On many of the other things, I think there's more competition, which can be good, because of course competition also can lead to innovation, and ideally the best product may win, and not necessarily only the product that is coming from the largest market. But of course, kind of from a cooperation point of view, I really am happy to see that green finance has such a strong following and a strong cooperation potentially internationally.
So Christoph and Charles.
I'll just add very quickly, I think what an amazing opportunity. I mean, just looking at us here, right? To cooperate in meaningful ways for the betterment of the entire planet, right? I think, as China announced, trying to make sure it gets to its carbon peak by 2030, rather than, commenting on whether that's possible or not, I think let's all try to get it there, right? Let's all try to get it there. And what an incredible accomplishment for China, but for mankind, should China be able to do that. Further, I'll say also that when it comes to the green finance, I think people can view China as a giant sandbox, in the sense that with the support of the relevant authorities in Beijing, I think China is able to give you a kind of a sandbox and lubricate and facilitate innovation in a way that may be difficult in other countries to do. And it's able to do the thing that China's always done. And that is, again, multiply your product by 1.5 billion. And when you launch something in China, you may get to that critical point faster, and then you can go and you can do it, worldwide. So I think it would be great if people thought of China as a green finance sandbox, where they can, really blow up their concept and get it to that break even quickly, and then be able to roll that out in a global way.
I mean, that's why I asked you about universities earlier, because, the issue with that sometimes is access, right? Because I heard you talk, I think, on a previous interview about that sandbox technique and the role of state-owned enterprise in in really incubating a lot of the payment infrastructure that's scaled so quickly in China today. It's a really interesting case study, particularly for me as someone who's studying how governance and technology are combined, and how, you know, a lot of governments using innovation tools and using technology can often push through change slightly quicker than just taking a traditional policy approach. And I think that state enterprise aspect to China is both captivating, but also a real challenge for countries where the innovation is pushed out from the private sector. And I think, you know, that might be a really interesting discussion for another time, because obviously with green finance and with climate change, you have to have government involved and state enterprise involved, as well as the private sector, as well as individuals. But yeah, I mean, it's a fascinating subject. I think we could have spent a lot more time going into some of the details, but Christoph and Charles, thank you so much for your time today.